Across to IG, Stan Shamu in Melbourne joins us now with some opening calls for today's session. Stan, good morning to you. Starting with those movements in currencies, sharp sell-off for the US dollar against the other major currencies. Is this in anticipation of that US jobs data out tonight, or was there more to it?
Yeah, absolutely. At the moment, it looks like this Kiwi repricing is in full force. Of course, the recent US data has been relatively soft, and it's not really a good indication heading into the non-farm payrolls and unemployment rate data, which is due out later today. As a result, I think a lot of traders just decided to price themselves a little bit on the short side. A lot of investors out there were quite long on the US dollar, and as a result, it's always an opportunity to take some profits off the table. And at the same time, this has really put a lot of pressure on the rest of the currency space, particularly with the dollar yen, which is one of the main points of focus in markets. And with that coming dropping below a recent support in the 98.80 region, it really did take the rest of the currency space weaker, and along with it, confidence was shaken a little bit. Of course, we did see US equities push a little bit higher on the back of that weaker US dollar, but at the end of the day, it seems like quantitative easing has been the main trigger of equities buying. And if investors feel that quantitative easing has a bit longer to run, with US data not really showing the strong signs of stability that some Fed members have been hoping for, then absolutely in the near term the US dollar might be in for a tough run.
We've seen, of course, sharp falls in the Nikkei, which has helped to strengthen the yen. I guess foreign investors unwinding some of the hedges that they had taken out to protect themselves from that recent slide in the currency there. How much or how closely are you going to be watching the moves in the Nikkei today to see when, I guess, the next move in the yen could be lower?
Yeah, absolutely. Whilst most analysts out there have been looking at the US dollar as the source of volatility, I think some in the investment world actually think it's the yen that we should be looking at. And of course, as soon as it dropped below that sort of 99 level and went below 96, I think just around that 95.80 level, then it really did trigger broad US dollar weakness. Of course, with everyone flocking back to the yen, it always does prompt some traders to feel that maybe this is a move that's here to stay for a while yet. So I think it's not going to be quite positive enough for Japan today. Of course, we're currently calling it down about 1.5% to 12,708. Now, this really does rattle quite a lot of investors' confidence out there, because the Nikkei is now down 20% from its highs just near that 16,000 level. So it really is a sharp drop in a very short period of time. The massive trading ranges we've been seeing out of Japan wouldn't do anything at all for confidence, and with such a big market moving so quickly in a short period of time, it definitely warrants some sort of caution out there. We also have a cabinet meeting in Japan today, and some think that we might get some sort of comments from the different officials in Japan pertaining the bond market, and potentially, if we do get something out of Japan about those pension funds moving into risky assets, then it might be a game changer for the session today. But as it stands, I think we'll continue to see weakness in Japan today affect the rest of the region.
What about for our market then today, Stan? Commodities doing fairly well overnight. Gold and oil both higher. Got the SPI futures up a couple of points. Do you think that could be a fairly subdued session ahead of the long weekend?
Yeah, absolutely. We're calling it flat at the moment at that 47.81 level. So we're not expecting any fireworks at all in the local market, despite US equities being a touch higher. Of course, we actually did see European equities fall, and that probably was because of the ECB not really looking like it's ready to do anything to stimulate growth in the short term. They're just happy to wait and see how things go, with Mario Draghi saying he does expect the European economy to come out of a recession soon. So that's probably not enough for investors out there. They probably want to see some bold and decisive action. At the same time, we've got this long weekend coming up in Australia, and that might see some sort of subdued volume heading into the weekend. Of course, we've got a data dump from China as well, starting with PMIs tomorrow, and that always warrants some bit of caution for investors, particularly with the Aussie dollar remaining this volatile. I think a lot of investors will be happy to stay on the sidelines and see how this all plays out before getting back into equities. Of course, later on today we've got those non-farm payrolls and unemployment data. That's also a key factor for markets. So it definitely is a situation where we might see some risk aversion today, people staying on the sidelines. The weak US dollar had lent a little bit of support for some of the metals, particularly gold, which is just holding above that 1400 level. We had oil a touch higher as well, but iron ore actually dropped quite some significant ground after having bounced back strongly the previous day. BHP's ADI is pointing a little bit lower, about 0.2%, so there's nothing much in it really to move markets significantly in either way. It will probably be a lot of portfolio adjustments in the absence of company-specific news today. So keep an eye on the banks and other yield players as investors continue to reposition themselves heading into the end of the financial year.
Will do, Stan. Thanks so much for the update.
Cheers, Liz.
Stan Shamu from IG there. Let's just take you across the close of Wall Street, and we did see a late recovery in the session. The Dow Jones Industrial Average ending back above that 15,000 mark, 15,040. So a gain of about 80 points or 0.5%. All eyes really on that US employment report due out though. For more on the session in Wall Street, I spoke earlier with CNN's Alison Kozik from the floor of the New York Stock Exchange.
You know, it's sort of an issue where you're seeing investors starting to try to figure out how to reprice the